If you're in the process of building a house, you're probably freaking out and you have all the right to be. Why? Prices are going up, many delays in the supply chain, and the house is getting constructed on time. And when are they ever going to be done? Then the next thing is, what's my rate going to be? The builder's lender won't lock me in, so what do I do? Then, do you still qualify with today's rates versus where they were? And we're going to address all those. And at the end of the video, I'm going to show, or at least talk to those out there that are looking to build, kind of some things you should be doing to protect yourselves. So let's get into it. Where I first want to start is to just show you guys there are huge delays in the markets, and what are they doing and how are they affecting things? Well, right here, you can just say home builders' confidence fall, and they continue to fall. They're just freaking out as well because their costs are going up and the delays are costing them as well. You can see down through here. Here's how much prices have increased. Steel production or products are up 113%. You know, all these other things, you can't really read those because of my blue screen, and I apologize about that. But your lumber's up 26%, steel up 113%, concrete up 9%, gypsum up 23%, exterior paint up 30%. The costs are going up. We all know that. But the one thing is I want to discuss is, okay, here's where rates are. And this is where I really want to start with those that are in the middle of their contract right now. You probably got pre-approved before you started this. So depending on that, what's that rate? So let's go. I pulled the historic rates for the last couple of years. You see right here. So most people, if they start building a house, they probably started in this duration of time last year. And now these houses are starting to come due. Okay, so when we blend this out, what's it give us as a rate? Well, let's just say it's giving us 2.9. Okay, that should be a fair number. All right. The next thing is, where are rates today? Okay, this is today. Let me refresh and see if there's any updated rates. Nope, so we're at 4.41. Again, we were at 2.9. All right, so here's what we're gonna do. Let's go over to my Nifty mortgage calculator and figure out some differences here. I found a new tool to compare different types of loans and how long the duration of time would be to pay things off. But in this category, we want to basically say, what's the difference in my rate? And then therefore, what's the difference in my payments? So let's go over to this right here. This is the calculator. So the average loan we got right now on a purchase is $450,000. Most of the people are putting 10% down. So here's my scenario that backs this up. $450,000 purchase right here. The loan amount would be $405,000. That is with 10% down. The loan term is for 30 years, and where you most likely got pre-approved is 2.9. Okay, I'm leaving everything else out. Just I'm gonna reduce the noise behind everything, and I just want to show you the loan payment, your principal and interest payment on this loan. All right. So the next thing is, what's today's rate? So we have the same parameters here, but today's going rate is 4.4. We hit the calculate button, and this is what we get. We scroll down through, and here's the breakdown. All right. So here is what your payment would have been prior to, and here's what your new payment is. It's almost $400 difference. Based on that, let's see the first thing. One, is that payment comfortable with you still? Maybe, maybe not. But do you still qualify? That's the biggest dilemma I'm going to have for a lot of people. So let's head off to another Nifty calculator that I have on my website, therateupdate.com, and we go over here. What I did is I went up to calculators and how much do I qualify for? Okay, so I put in our parameters. The purchase price is $450, 10% down. The rate that we got pre-approved at back way when ago is at 2.9. So that means you would need income of $7,891.20 to qualify for this loan. All right. And I really didn't put in much anything else to make this comparable. And you're going to see here in a second. Let's see, what does this number come out at if the rate, or if you're trying to get qualified today? All right, here's the same calculator. I made no other adjustments other than the rate at 4.4. And you can see now you need $9,032 to qualify. All right, So I hope you get my point here. My point isn't only, is it comfortable? Do you actually qualify? So what I would suggest you do is either call the place that you got pre-approved at or call us. And if you've already pre-approved somewhere, I ask you to send us a copy of your loan estimate. Let's review it just to see the costs and everything structured with that loan. But I highly suggest if you got a quote from anybody in the last month or two, it's gone. It is gone. Anything is of yesterday or before, it's gone. Because mortgage rates spiked yesterday, and you can see on my rate, and if you watch the rate update this morning, just recently we're at 4. Now we're at 4.4. A month ago we were 3.8. Okay, so you get my point there. My concern is, again, one, can you afford the new payment? Let's say, oh yeah, I'm just going to do it because I know I'm going to lock in on that payment. But the real question is, do you still qualify? Okay, and this is where I want to take you down this path. Call your mortgage lender, okay, or call us as well. Get at least 2 opinions, guys. Let us at least give you a valid quote today. Have your other lender that pre-approved you give you a valid quote as of today. Then let's compare apples to apples. All right. At the end of the video, I will give you an email address to send your loan estimates, or at least an estimate that they're emailing you, so we can validate it, and then I can show you, based on our 130 plus lenders that we have access to, what we can find you. Okay. So that's if you're in the process of building a home right now. Now let's talk about, you're kicking the tires and you're like, hey, I really want to buy. So now what do? Well, before you sign that dotted line on with the builder, here's what I've asked you to do. Are they giving you any incentives? Okay, let's say, for example, they're going to come back to you and say, okay, we'll give you a $10,000 credit if you use our lender. You need to negotiate. Okay, you need to negotiate. And the reason being is, why do I have to use your lender? Why can't I use any other lender? Because normally what's happening a lot of times, if this is what I'm seeing, is you're going to get a $5,000 or $7,000 or $8,000 credit. Then that loan is going to cost you $5,000 or $6,000 or $7,000 on fees that you could avoid. So all they're doing is they're giving this money over to this hand, and nothing's really transpiring. They're not out or making any money. They're just, it's a wash. But they're pushing you to that company. I suggest you get at least an alternative and make sure, or at least try to negotiate, saying, I want to use my own lender. So why can I not get this credit? And just ask them the question. I'd be very interested to see what their comments are. Email me. Put a description down below. What are they telling you when you ask that? Are they saying yes or are they saying no? Okay, so that's the biggest advice I can give you at this time. But we do offer a long-term extension. We have several. We have one that goes out 270 days. That comes with a cost. It costs you 75 basis points. So 0.75 of the loan amount. So take your loan amount, hit it by 0.75 and hit the calculator or hit the percentage button. That's how much of a cost it will cost you to have that loan locked in for up to 270 days. All right, that is 100% refundable at closing. All right, so now the next question you have is, what if rates really drop? We go into a recession and all this happens. Well, we can do one of 2 things. We can go back with that same lender and do a one-time free float down. Okay, that'll float the rate down to what the 60-day rate is at the time prior to closing. All right. Or if rates got that much better and we can find you that much better of a program with another lender, I will move your loan file over to that company. But we're going to lose that rate lock expense that you paid. So we will weigh the differences. What are the costs and the benefits between the two? And is it worthwhile? Okay, so now we do have several 180-day lock programs that don't cost you anything. So at that time, what we can do again, we can either float you down, or if rates are that much better with another lender, we take you to another lender and there's no cost on either loan to do that. Okay, so that's the benefits there. So I highly suggest you do this if you're coming in and kind of to the tail end of your building. But if you're looking to start building, that's another issue. okay, because you're probably looking at a year's time frame of the house being built. There are a couple lenders right now that are locking out 1 year. Those rates are so bad that we're not even offering those at this time. So again, if you're in the process right now, please ask your lender, what rate can you get me as of today? Send me the loan estimates. You're going to send it to dan@therateupdate.com. If you just got a recent loan estimate, please get another one, because as of yesterday, they are no good. That's how much rates changed yesterday. And if you're in the process of you're ready to sign on that dotted line with the builder, please be careful. Try to negotiate your credits and costs with them and explain to them why. Rates are going up. You have the risks of, the builder has the risks of the cost of the house going up, but you incur a huge cost in interest rates going up, driving up your payments higher and higher and higher. So I hope you found value in this channel. I hope you find value in this video. If you do, all I ask you to do, give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert.